Today, we are going to analyze one of the most valuable companies in the world, NVIDIA. Let's see if it's a buy or a trap. Starting with the fundamentals, look at the earnings growth they have. They have a phenomenal growth rate ahead. The company is expected to grow 62%, and the normal PE ratio in last 5 years has been 47.6. They are AA- rated, and they have very minimal debt, which is 6%. No wonder it's a $4.5 trillion company. Let's jump into the forecasting tool and see what returns can be expected before we go into their financials. If in the next few years it trades at 36 PE ratio, you could expect to earn a 37% annualized rate of return. Now let's be conservative and say it will only be traded at 25 PE ratio. It will still give you 21% annualized rate of return. And for the worst case scenario, let's say it trades only at 18 PE ratio. It will still give you 7.68% annualized rate of return. So even in the worst case, it will give you a positive rate of return. The Analyst Scorecard for this company is almost perfect. For the 1 year forecast, they only missed 9% of the time. And for the 2 years, they've never missed. I know there is a lot of negativity around this stock at the moment due to AI growth concerns, Michael Burry issuing negative statements, all the big techs coming out with their own chips. But despite all that, they are putting the numbers which have never been delivered by any company in the world. I'm not saying these are not the real concerns, but if you dig deep into it, they have a gross margin of 71% and net margin of 55.6%. Amazon, Google, Meta all have their own chips, but they are still buying NVIDIA. Google's TPUs and Amazon's Titanium chips are only good for specific use cases, but not for everything. And their cloud customers are still using NVIDIA chips because developers are familiar with NVIDIA's CUDA platform, and it will be very expensive to switch to anything else. They have to rewrite the whole code to be able to switch the hardware. And every new technology has bugs with it, and sometimes it's not worth switching to something else. For at least 2 to 3 years, I don't see NVIDIA's growth slowing down. Let me know what you think in the comment section. Now, let's move on to the financials. In the last 3 years, their revenue has grown up by more than 3 times. That's 300% growth rate. Their net income has gone up by 4 times in last 3 years. And shares outstanding haven't changed much in last few years. They have $62 billion worth of cash, and their total debt is only $11 billion. Which means they can pay off their debt today if they want to and still have plenty of cash left. Now they have increased their capital expenditure a little, but compared to what they earn, it's nothing. They are paying a small amount of dividend to their investors as well, and I hope they will increase that over the period of time. They have very strong financial statements, and no wonder it's one of the most valuable companies in the world. Now let's move on to the technical analysis. On the daily chart, it has been consolidating sideways from last few months, and it has been stuck between $160 to $200 range. It does have a very strong support at 160 level and very strong resistance at around $195 to $200. Trend is slightly bullish. RSI is around 62 and MACD has turned positive recently. Moving on to weekly chart. The weekly chart is slightly bullish as well, and RSI and MACD are in normal range. Nothing crazy there. That means momentum is still lacking. However, on monthly chart, it is in a strong bull trend. RSI is close to 70 and MACD is near the overbought level as well. If you are a long-term investor, it's still a good buy, but not a screaming buy at these levels. I believe the intrinsic value of this stock today is around $210, so it's trading at a slight discount. Let me know in the comment section if you have bought NVIDIA recently or planning to buy. Don't forget to like and subscribe the video, and I'll see you next time.